And we are live, guys. Bitcoin has back to pumping on DCA anticipation. How are you guys doing? James, how are you?
Good. Great weekend. Lots of lots of stuff going on in the world, which we'll talk about many of the things right now. And sometimes it's comical how you can almost foresee what's going to happen next, whether it's politicians trying to muscle truth or Bitcoin pumping and everything else in between. It's mad, but things are happening
Ivan,
faster and sooner than expected.
Good.
The big thing.
fantastic. How are you, Ivan?
Yeah, all good. I mean, Bitcoin is fantastic. Everything is pointing in the right direction. So anticipation of DCA is back. And yeah, good to be back with you guys.
Exactly. So I thought we'd cover a lot of things. Bitcoin, obviously, what's happening with, Grayscale, Genesis selling. And we're very close to the halving. So what will happen? Will it be like a sell the news events, or will that be the point where everyone comes in? What's happening with Coinbase and the SEC, the ETF for ETH discussion is back. What's happening with that? Let's look at the chain. Let's look at the Solana network issues that's been. Is there a way to have passive income in crypto? That's something that I'm thinking about. Let's talk about that. Banks are getting in on the Bitcoin action. Finally, gold is breaking out. Is that good or bad? Tesla stock, James, as usual, have had some very interesting, very thought-provoking videos about this and what's happening with Elon Musk and free speech. Did we drop Ivan? I'm not sure. We dropped your camera, Ivan, if you can still hear us.
I'm here. I'm rearranging some stuff here.
That's great.
There I am.
Perfect. And anything else you guys want to know, please ask questions. And of course, if you're not already, make sure you subscribe to Ivan and James. But of course, you are already. So, should we start about talking about this one?
The pumpage. Yeah.
It's pumping. Everyone was bearish again. I felt perhaps we're getting a dip in an uptrend. I was hoping, wishing for another dip, but we didn't really get it. So what's happening, guys? What's your readings? James, do you want to start?
Yeah, I did an interesting analysis. I asked myself, what is the price action for Bitcoin over the weekends since January 10th? And that is since the ETFs launched. On an average, every single weekend, Bitcoin goes up at least $1,500. And then I did a video before the weekend saying, it's going to pump this weekend, welcome to the Bitcoin party. And it's exactly what it did. And that's because the T+1 delay of the ETFs buying, and Friday was a big buying day. They can't actually put their orders in until Saturday. And we're hearing lots of rumors that it's getting really hard to find supply. And there are people jumping in and buying whales doing transactions all over the world, snagging what they can. Not just Mr. 100, other players too. We're seeing a lot of whale accumulation. And there's a bit of retail FOMO happening too. So that's kind of my perspective. But what's also interesting is the market in general is extremely bearish still. There's people that, again, we've been talking about them for a long time. Their bags aren't full. They're praying for a $40,000 Bitcoin driven by the eclipse of the sun or something like this, or some astrology that I don't understand. But the supply and demand doesn't illustrate that's going to happen.
Can you elaborate on that, on the T+1? What does it mean? Why can't they buy it on Friday?
Yeah, it takes time. So they sell the shares, they take in the cash, they count the cash, and then they deploy the cash to buy the Bitcoin. And sometimes it's T+2 as well. So sometimes they take in cash on a Monday and will not be able to buy till a Wednesday. And that's allowed by the SEC. And that's causing a lot of shenanigans. So that's why we did see some manipulation in the past. But now it's become ever so harder to manipulate the Bitcoin price because it's so hard to get. It's so hard. We'll talk about that later too, as to some illustrations there.
It must be the DCA anticipation pump, don't you think so?
The Ivan anticipation, maybe.
Yeah. Ivan, what's your take on the market?
Yeah, listen, I like to keep it simple. If you can bring up my screen there. Bitcoin is actually, from a technical analysis perspective, maybe one of the easiest
I
markets.
See your screen. One second.
You need to look at it below there. Yeah. I mean, from a technical analysis perspective, Bitcoin is maybe one of the easiest markets to trade because there is pure emotion. There's not too much, connection to commodities or like real estate or something physical. It's all digital. So it's a lot about emotion, FOMO, FUD, people buying, selling, and so on and so forth. So when you have such a market, also where there's a lot of retail, now institutions are coming in, but traditionally there's also a lot of retail. You have technical analysis working extremely well. You don't have to make it too complex as long as the trend is bullish. And as long as you have simple patterns, like, for example, ascending triangle, they do, in most cases, play out according to the textbook. So right now, Bitcoin has been in this ascending triangle for the past month or so, basically since the end of February, and it's been very good at calling all of these wicks. Basically, when you have this kind of formation, you don't have to be worried about the wicks, because if it's ascending triangle, it's gonna likely come back into the triangle. Not a guarantee. It's not a free money machine. It's a market, so nothing is a guarantee. But in most cases, and the same thing we saw here, many wicks down, but then bam, still within the triangle. And the same is right now. The breakout target of this is high 80s. And likely we're gonna be magneted, like a magnet pulled towards the 90K level. So that's the overview. And most importantly, also, you can keep it even more simple. Like, actually, you don't even need any of this like trend or patterns. You just look at Tether printing. Last week we had $3 billion printed. So that's the number one thing you look at. Then if you want to get a bit more geeky, you can look at some simple trend. And then you can, if you want to get even more into DCA, you can use like simple patterns, nothing complex. So all in all, if we are at 90K at the halving, it wouldn't surprise me. And the halving is within 11 days. So that's my number one scenario. Let's see how that one unfolds.
Yeah, I made an interesting post actually. If you could share my screen, I did a poll a couple of days ago. 10,000 people voted on it, and it shows you, this was in 13 days. Now it's in what, 11 days to the halving. What the price will be at the halving, and half, exactly 50%, 5,000 people voted, 72,808. So that already tells you that half of the Twitterverse doesn't know what's happening. Maybe they're hoping for that. I should have probably put like a $60,000 target. It probably would have said 80% if it was on there. But I know that, I looked at a whole bunch of numbers and I calculated that 72,808 is the floor at the halving in 13 days from then. And there's also a chance of some other numbers too. 89K, coincidentally, Ivan, that's similar to what you're thinking about for the halving. And then just shy of 100K, because there will be sell pressure at 100K. There are people with long-term sell orders for some lifestyle chips, to buy that Lambo or that house on the beach in the sun or whatever else. There will be people selling. So that's why I do believe it's going to take a while to break through the 100K level for Bitcoin. But they are the scenarios that I see as well. With, I think 80 to 90K is probably a lock at this stage in 12 days, 10 days.
And yeah, I can comment on that also, because I agree. We put in the thumbnail for today's video, it wasn't only clickbait, but if we break out, now we're in this on a daily time frame, we're in this symmetrical triangle, we're almost at the breakout point. And if we break out, the next major resistance is really this channel that has been going on for a long time, and the target of that breakout is about 90K. So I mean, as Ivan said here, technical analysis has worked really well for Bitcoin for a really long time. So it also becomes a little bit self-fulfilling then. There will be a lot of people with who draw the same chart. And then they will think, there might be resistance at 90K. Then there might be resistance at 90K because of it. So we'll see. But I also think it's absolutely not impossible if we break out here of this symmetrical triangle, which could happen today. Yeah, that's definitely possible. And that's a great thing. We're getting clues along the way for what the market is doing. That's a great thing.
There is another thing that points to 90K. If you share my screen again, this is a textbook targets when you have a parabola. You can just Google this, textbook parabola target, textbook TA. And I think Kevin Svensson who is also a YouTuber, was the first one to speak about it. But basically, when you have a parabolic trend, just like Bitcoin is in right now, it is a parabolic trend. You can draw a parabola starting here and at the beginning of 2023, and then it becomes quite parabolic, as you can see. But anyway, when you have base 3, normally there are 4 bases to a standard parabolic pattern. When you have base 3, which is here at 45K approximately, you have the price doubling after the base 3 until the parabola breaks. So basically 45 times 2, and that's when you would have the parabola break if it is a traditional textbook parabola. And that one is also pointing to 90K. So many things right now are towards 90K. And maybe that's also why, like you say, CTO, maybe that's also why there will be quite heavy resistance there, because people also see that as a big resistance. So let's see. But 90K is way higher than 70. So we will deal with those resistances when they happen.
Exactly. Let's move on. I read on Twitter that Genesis has finished selling, and that is, relates to the GBTC outflows of the ETFs, which is what has really been dragging down the whole ETF flows a little bit. I don't know if it is true. Have you heard anything of this, or have you seen anything? James, you often follow this very detailed.
I follow it every day. So first of all, I have a screen on this. Arkham is tracking the Genesis wallet, and pretty much it's drained. I don't need to go into detail about this, but what you can basically tell is they've redeemed about 32,000 Bitcoin. It's over 2.1 billion just over the past 3 weeks as part of their ongoing bankruptcy process. And that is pretty much all they had. There might be another 200, 300 million, but that's it. And the other chart I have here shows you the trend of what I call GBTC dumpage. The first 5 to 7 trading days was all FTX, and that went away. And then we had the initial dumpage of Genesis, DCG, whatever you want to call that whole bankruptcy process. The first tranche was, I don't know if it was related to Genesis, but definitely related to DCG. And then the second tranche as well. And then the last big hits were about 7 to 8 trading days ago. And the pink line is the trend of dumpage, and it's going up, which is good. So that tells me that the flush is nearly done. And we may have had the biggest dumpage day last Friday of about 110 million approximately. So we'll watch this carefully, but I think it's almost all done. Not all done. There will be slow bleed, but nothing like the $500 million a day we saw. Sometimes $1 billion a day in the first couple of days. We had 5 or $6 billion days out of Grayscale, which is staggering to think about.
Oh, very interesting. Very interesting. Let's move on. Halving. Do you think there's a chance that it becomes like a sell the news event, that everyone is anticipating, looking forward to the halving, and while the actual like run up happened before the event, and then when the event comes, it's like, okay, what now? What's going to happen now? And then it starts dumping instead. Have you thought about that? Do you think about this at all?
Well, it's likely going to be like with the ETF. There's maybe going to be like a week of down, because the psychology is the same. We had the ETF, people were hyped, and then it dumped. But I don't even remember how much it dumped. It was so insignificant. And it got removed from the consciousness basically the next week. So the same thing is here. Maybe there's going to be a bit of sell the news, but then the true new economics of the new world with 50% less inflation are going to set in, and that will affect the price, because BlackRock, Larry Fink, they will likely keep buying, but now it will be even more harder to get Bitcoin.
Yeah, the ETF, after the ETF launch, we had this correction. It became like 20% something. That was it. Not much, honestly. So and then the trend didn't even turn; it just continued, and we continued past that. Yeah, James, what do you think?
Yeah, I have another slide on this as well, which is kind of interesting, just to put the perspective on how hard, as Ivan said, this asset is, how scarce. So if we look at just the first 4 days of April, 3,600 Bitcoin were mined. That's becoming 1,800. This chart's 2 days old, so please excuse the 14 days. That should be 12 or 11 days now. The number of Bitcoin in just 4 days bought by the US ETFs, 4,470. Mr. 100, 2,267, and then Robinhood 700. So you have a minus 4,000 Bitcoin in 4 days deficit, just 4 days. And that becomes minus 6,000 deficit in 12 days. So the point is, this thing is so hard, massive shortfall, and that cannot be understated. So I do believe this time will be different post-halving. People are praying for that post-halving dip. If the constant bid comes in from these ETFs, which it will, and if the grayscale dumpage continues to slow down, which it will, and it took 90 days for the Wall Street money runners to get comfortable watching the Bitcoin price action, they are all coming over the next 2 to 4 weeks. There is no chance we're going to see a traditional dip after the halving. There is no chance. The people that might be affected would be the Bitcoin miners, because a lot of nervousness around those guys. Will they be able to be competitive? What will happen to the hash rate? That'll be interesting to look at. But the Bitcoin itself, no, not a problem. It's just too scarce. There's way too much demand already. And we have Hong Kong ETFs coming late April, if I'm still correct, and so many more. An Australian ETF is coming, the first ever. We'll talk about Brazil later.
I see not so many people talking about these Hong Kong ETFs. I think just like you, we've talked about it a few times. I think it can be very significant.
Oh yeah.
There's a lot of people in Asia and China, and in China and in Hong Kong and in Asia in general with a lot of money.
Oh yeah. If you add up the billionaires in Hong Kong and China alone, it's basically the same as the US, and that's staggering. So
yeah. Plus, they like money. They like gambling, and I'm not saying that crypto is gambling, but sometimes it does feel like that when. So I think
the biggest tailwind in China, though, that nobody really talks about, is they got wrecked on real estate over the last 10 years. Okay, so
yeah,
tell me, gentlemen, you lose your shirt over 10 years in one category of asset, or are you going to go back into it? No, you're going to try something different. That's why I think Bitcoin will be red hot in Asia.
That's a good point.
Yeah.
Yeah, and the stock market is also in many ways not a good solution for most people in this world, and also that it's so global. And then let's say you are in China, you don't want to be in the ecosystem. It's so nice. I can imagine it's so nice to have Bitcoin because it's also outside of the system. You're not connected to your country. You can move somewhere else if you want, because also it has strict capital controls. So if there's a way for them to get their hands on Bitcoin, and real estate is not a solution, then Bitcoin is a no-brainer.
Yeah, I think it's been a huge generational shift. Previously, everyone bought real estate, and it was kind of a key to wealth during your life. Many people don't see it like that anymore. It's too inaccessible for most people already. So let's move on. I saw a lot of people on social media that Coinbase beat the SEC for secondary listing, but I don't actually think that's the case. I'm not a lawyer here, but I tried to read this, and I don't think that's actually has happened yet. It feels like some points have been found in Coinbase favor, but it's not settled yet as far as I can read. If anyone has any other insights in the comments, or any of you guys, let me know. But I think that this is still ongoing. That's my conclusion from preparing this. So let's move on. What is ongoing, though, is the discussions and speculations about an Ethereum ETF. And this is heating up again. I saw both of you maybe talked about this, or at least you, Ivan, that JP Morgan is on this again and saying, they will approve it, guys. They're going to approve it.
It's going to happen.
And specifically, they're saying if there is no spot ETF approval in May, then there will be litigation, meaning people are going to sue the SEC again and try to get it through similarly like Grayscale did for the Bitcoin ETF. What's your take on this, guys? Who wants to start?
Yeah, they lost against Ripple. I think we discussed a few streams back, but they lost against Ripple, and now they are facing ETH. And the ETH may have some problems, like you, James, brought up. Maybe there's something to say about the ICO they did almost 10 years ago, if not more than 10 years ago, but approximately 10 years ago. Maybe some other detail that they may bring up. But at the end of the day, SEC themselves said that ETH is a commodity several times. It is traded on commodity exchanges for like futures, for example. So the chance of them winning it is so small, and the Coinbase wants the revenue. It would be illegal for Coinbase not to sue them, because that will not, then they're not protecting their shareholders' interests. And the lawsuit is already probably written and ready to be filed by Paul. I think that's the name of the lawyer that is Coinbase lawyer on Twitter. He is ready for the fight, and yeah, we'll see in May if they approve or deny it. But what this article says is that they may deny it, and we will just enter a litigation process, which will likely end with SEC losing. And yeah, that's my view as well. And if they approve ETH ETF, then likely Solana is next, ADA, like everything that is tradable, likely to be also an ETF. And yeah, I mean, that would be insane. If all the major coins are ETFs, it will be amazing. And I think it's going to happen because all of them have passive income in terms of staking. And that's just more opportunities to sell it into their clients, because the clients want return. They want more or less. I mean, Bitcoin, you and I here, yes, we understand Bitcoin, but for clients, it may be easier to understand for them that, listen, you get staking rewards, which are more certain. You know, each and every day you get this many staking rewards. For the client of this wealth managers to understand that Bitcoin is going to go up and up and up and replace fiat and so on, like, you really need to be quite into this industry to really get that. But to get staking rewards, that's easier. And it may be easier for them to sell those ETFs with staking. So yeah, I think it's going to happen, this ETFs with altcoins.
What do you think, James?
Yeah, the SEC doesn't have a legal leg to stand on. They can delay, but it will have to be approved. And if again, as I've said before, whatever BlackRock wants, they get. It's that simple. They pick up the phone, they call the president or the head of whatever and say, do it. That's it. I need that meme, you know, the do it guy with the hair. Do it. Do it.
Do it. Yeah.
Yeah, I think so too. And I was kind of a little surprised, because I've learned a lot from this guy, Eric Balchunas, even though he's working for a traditional media, Bloomberg. I feel he has a lot of great insights around the ETFs. And this is a couple of weeks ago, so perhaps the situation has changed after that JP Morgan statement and so on. But he put it at like 25% odds.
Yeah. No, it's coming, and literally 2 months ago he said 90%. So it's changing,
Right.
and Eric is great, but his job is to be an ETF analyst. That's all he does. So
Yeah, absolutely.
when it comes to,
I'm just thinking logically. I mean, there is so much money here for the traditional financial industry, which they have gotten in. We'll come back to the banks later, but now they're in it. Now they have a part of the action, a part of the pie for Bitcoin, because you trade through the traditional channels. For altcoins, they don't. They're excluded. Of course, they want in. I mean, it seems like such a given win for the traditional financial industry, and that they will be kept out by the SEC. It seems, unlikely, is my feeling. I agree with you. I think it's going to happen, because if they approve one altcoin, there's going to come 10. And there's going to be so much activity, so much trading, so much volatility. Money will fly in that direction, and it will be very interesting, I think. So let's switch gears again, because we have so much to talk about. The heat of the race is heating up a little bit. The Ethereum, the Ethereum coin is doing garbage. The chart is looking absolute garbage. Like ETH BTC chart breaking support. Fees are high. It's not good. Solana and Base is really seeing. It feels like those are the two competitors now. That's what everyone's talking about. And I experimented with both. Of course, they both work, but they both have some issues. Base have some issues. Solana had some issues over the weekend. We talk about it every week, but the situation also changes every week. Let's cover it again. Should we start with you, Ivan, this time? I think I started with James last time.
Well, I mean, with Solana, the team is very good. I shared with you guys. We at Morales, for example, we're integrating Solana now, and we needed some help from Solana team. And yeah, I mean, the founder was Insta reply, very good team. So I like that. I'm very bullish on the team, and also the team. You know, there's no tribalism. Austin today, which is their strategy lead, Austin Federera, also tweeted, you know, ETH is doing great things. We're building on the shoulders of giants of ETH. He hopes that ETH ETF will be approved, because he knows also that then Solana will be approved likely. So all in all, Solana is likely to fix those problems they have now with this congestion and transactions failing. And in the meanwhile, the attention is on Base, because you cannot use Solana. You go to Base. That's those are the two shaping up. And yeah, I mean, then there's whole debate with its L2, this and that. But I think UCTO said at the end of the day, like, the way you onboard is you go to Coinbase and then you withdraw to Base, or you withdraw to Solana. So the user experience there is quite similar. And at the end of the day, if it is layer 2 or layer 1, most people will likely just go straight onto Base. And that's what Coinbase right now is doing with the smart wallets, that all their Coinbase.com users have an on-chain wallet straight on Base. And I spoke a bit about this today, but at some point, crypto infra will become boring. I don't know when that will be, but it's kind of like with social media. You know, like 2002, it was so cool. You know, try new social media or try new way to connect. But then it kind of became boring, and then Facebook was just the dominant player, and then nothing happened. So at some point, this will also happen in crypto. I think we're way too early, like, to see that exactly what infra that will be, because when that happens, likely we will not see another infra replace it, just like no one is trying to replace Facebook, because it's so like commoditized, and so like we're not even trying to explore new social medias. It will be at some point like that in crypto as well, where everyone kind of settled on a new chain. No one even wants to try another chain, but we are way before that. And yeah, the state of affairs now is that it's mainly between Solana and Base for this meme coin use case, which is the biggest use case now. And we'll have to see how this industry evolves, because, like you say, it's also changing every week. Like, it's week to week, it's totally different. So you really gotta be on your feet and follow and see the speed of this industry.
James, what's your take?
Well, Ivan said something very profound there. It changes every week. And that's so true. So if you blow this one up, this is fascinating. So all of a sudden, Solana, of course, is smoking everything else. It's a victim of its own success. It has multiples of the next biggest chain, which is Bitcoin, 640,000. Solana's at 1.4 million users. And those users are very active. And yes, the chain is very congested because of a problem with the thing called Aura. They are fixing that in a version called 1.18. I'll talk more. 1.18, I think, is the version to kind of put a spam filter on this new Aura thing, which is causing much of it. Also, the meme coin enjoyer. I had to share the little graphic. But I do want to point something out that's super interesting. So you hear about all these layer 2 killers, okay? And we've seen what's happened to Matic, etc. But now all of a sudden you got this thing called Linea, which now has more activity, more users than Ethereum base chain itself, and smoked Arbitrum. And that's another layer, yet another layer 2. And these things are popping up left, right, and center. And people flip to them for things like memes, etc. very fast. It shows you the loyalty of the users. I think it does DEXs, decentralized applications, zero knowledge proof. I don't know much about Linea. It just popped on the scene very recently.
Linea is the blockchain by MetaMask, you can say. I mean, it's by consensus. And I've heard that they have a lot of plans for meme coins there as well. So there is going to be a Fox related coin there, like MetaMask. Yeah. We'll see. We'll see. But yeah, it's going to be another way to be a meme coin enjoyer.
But what blows me away is, first of all, I go back to the same thing. There's so many layer 2s, and there's zero loyalty in the layer 2s. Like Matic was the key original OG layer 2. Now people don't even talk about it. Arbitrum killed Matic, and now Linea is probably killing Arbitrum. And what's next week? I don't know. We don't know. But the key thing really is kind of this slide too. And this is from Toli, who is in direct communication now with Ivan. And Ivan, you were blown away by the responsiveness. But alt L1s have the privilege and opportunity to do all the things that Ethereum can't. And given that 4 years since Solana's launch, ETH plus all of the L2s don't account for much of a load in crypto. It's been worthwhile to explore other options. I think that's a very profound statement, and it shows you kind of where we are in the world. But then you have this other weird thing happening in the world. It's like ETH is being attacked from all sides, like Adam Back, the OG, kind of throwing mud at Ethereum, which upsets the ETH maxis to no extent. And then you got a crypto soap opera. You got Mert fighting David Hoffman live on Twitter. Like literally, you could turn this into a TV show. It's incredible.
I mean, bankless guys, they are coping so hard. Like they are, they're not changing their opinion at all. And it's kind of like I do recognize, because I read an interesting thread, I think by Eric Wall, where he said, listen, we've all been here. The old guard, like the investors from the old cycle, you think you have it all figured out. Like from the beginning, it was Bitcoiners. They have it all figured out. They have their Bitcoin bags fully filled. And then a new cycle starts and you see, what the hell, ETH is pumping more than Bitcoin. What is ETH? It came out of nowhere. It's a scam. You say you try to attack it, but it just grows and grows and grows. And the same is now happening to ETH. All of the ETH maxis, all of the ETH community, they have bags packed, L2 bag packed, ETH bag packed. And the old guard has it figured out. And now we just need to wait for a new cycle and new investors. And then Solana starts to grow. Like, man, what the hell? What is this scam? Turn on and off. But at the end of the day, it's always like, so that's why you gotta see what's new and you gotta be part of it. And this is hilarious, this Mert and bankless fight.
Yeah. And there is the point I'm trying to make is going back to this. There is zero loyalty in crypto. The degens that are pumping everything right now, that are trading hard on the dexes, that are trading these meme coin things, they drive all the action, all the fees across all the chains, and they will flip in a heartbeat from one chain to another. And that would be extremely concerning. What's also amazing is the era digitalis, as you say, CTO, the old guard. I mean, ETH is fine because it's kind of like the 800-pound gorilla. It's very hard to shake the rider off a horse that's in the pole position, but that's actually been happening. But when you look at the old chains, it's kind of tragic to see. And also, you talk about the bankless boys coping hard. You should see the heads of other L1 chains. They're really coping very hard. There's a little bit of a kerfuffle over the weekend as well with those guys. But again, it's so interesting to watch. And again, new technology is extremely disruptive. It's coming very fast across all areas. You are not prepared. Nobody here is prepared for what's going to happen in the next 24 to 36 months. I promise you. Hopefully the three of us will still be here in 3 years, but we ourselves will probably be disrupted. And there'll be bots in our image instead.
But I like what you said, James, about the memes memes are really putting everything to the test when it comes to infra. And it may sound ridiculous, but that's how internet grew as well. There were all kinds of use cases, that you could do on the internet. Maybe it's going to be used for work, maybe for transportation, people thinking about different use cases. And what was big on the internet in the beginning that made it scalable, it was adult content. So the same thing is now with all of these memes that, it's not really, this use cases that everyone thinks that is gonna at the end they really also change the world, but it's just freaking memes. Just like the adult stuff was the first thing that really put all of the internet to the test, made it scale, so you can download everything, all of that, pictures show up quickly. So now it's the meme, basically. It's the age of the meme. It will put all of this blockchain to the test. And also, with Solana, because the L2 space, they've said that no matter how much we scale, it's gonna always be more MEV, more arbitrage you can do. So there will always be demand for that extra scaling. So it's going to fill up instantly anyway. So instead, we scale with these layer 2s for different use cases, and you can function your own variables. While Solana is saying, listen, we will try to scale it on L1. And we will do it with local fee markets, so that if you have one app really exploding, only fees for that app are going to be big, and then all other app can be small fee. So you have this local fee market, which is fantastic. I think other chains should integrate as well. But as we also see, you discover new problems. Like the recent congestion is a new problem they have to figure out. Likely they will figure it out, but all of these issues in reality is just making it stronger. It's anti-fragile, kind of like Bitcoin. And then you come out on the other end, and now you can handle maybe 5x, 10x more demand. But it's always in the process of scaling, just like internet. From the beginning, it's too slow for email. You cannot even send an email with a picture, too slow. Then you scale it. Okay, now people want to do freaking video. They can, picture works. Now when they want to do video, internet is too slow, not scaled enough. Takes a few years. Now you can do video. Now you can do freaking live stream. And very soon people want to be in the 3D world, fully immersed. The internet is too slow for it right now. So internet is always in this state of scaling. And the same is with blockchains. There will always be, in a state of scaling, something will always be too much for them, or put too much pressure that you have to figure out new ways. So yeah, exciting times, and we're just in the beginning.
And probably the most interesting analog, maybe CTO and Ivan, you can talk to this, is Hello Kitties or something from 2020, 2021.
CryptoKitties,
that took ETH down for 3 weeks. Remember that?
Yeah, it was crazy. It was crazy.
And what's so interesting with the meme coin is that, frankly, a lot of the coins, a lot of the trading that has happened has been narrative trading, while there hasn't been much behind. Like for years, I don't want to name any names, but there were big chains that reached like billion-dollar valuations, and frankly, they didn't have much. It was just narrative, and then people trading that up. It goes up in parabolas and downs and symmetrical triangles and all that stuff. Memes is like, okay, but let's forget about that also. We're anyway here just to trading, so let's forget about the narrative as well. It's just a picture of a cat or a dog, and let's trade it. Let's see how it goes. And that's very interesting, actually, that it kind of collapses into that. And yeah, that's definitely the case. Then something else, just one reflection, something that Ivan said that I think is very important. You said that you reached out to the co-founder of Solana. He is like co-founder, right? And presumably a very busy person. And he replied instantly and, help you with the thing you needed help with. Of course, it's in his interest, but a lot of heads for different projects, they wouldn't reply. They would feel like, I'm too busy, I have teams to manage this. I'm too important, too busy to deal with some, node history, whatever it is you need to deal with. While in my experience, the best leaders are actually very responsive, and they feel humble. They feel like, okay, someone needs my help. I better get on and serve them, because who knows? Otherwise, maybe we get overtaken in the future. I worked in corporate. I worked in Ericsson, and frequently it was like that. If you email the CEO, like the CEO of Ericsson Group, it's 100,000 employees, and it's like, hey boss, do you think we should do this or not? Because you don't always have to go through a hierarchy. Sometimes it's something that concerns globally, and you can ask. And frequently he email right back in like 2 minutes, like, yeah, sounds like a good idea. You can go ahead. CC some other people. Then in 5 minutes, you got it sorted. While if you email some middle manager, he feels like, oh, I'm too busy. I don't have time to check my email. Have you scheduled an appointment with my secretary? You have to call 5 times to get him to, answer. And the best leaders are often like that. And you really saw it there. So I thought that was an interesting reflection on this. We will move on with agenda. Just answer one question here, because someone said, why is it urgent? We put urgent in the title, and that's like actually urgent, I think, is the highest degree of urgent. Here we put urgent, but it is actually urgent. This is the daily candle. This is today's candle. This is a symmetrical triangle, and the definition of a breakout is if it breaks over the high of the third touch point, which is here. And it is doing that right now, actually today, while we're having the show. So that's to answer the question who was saying, why is it urgent? It is actually urgent to watch the show.
In
So
fact, I did a very crude Saturday morning, a very crude symmetrical triangle myself. I said Bitcoin's looking to break out, and Ivan, you liked it immediately. And I think Bitcoin's at 68K. People say,
Yeah.
"No, it's not. It's going to go down to 60K again."
Yeah,
And
I
then
mean, the funniest
$4,000 later,
the
boom.
funniest critique to TA that I got is that it's too simple. I draw, so on the daily it's symmetrical, on weekly it's ascending. So I draw the pattern, and then someone's like, Ivan, is this TA? You need to have more. Like, what? It's too simple. Like, it's
More
not
lines.
real TA. So, but in crypto, you gotta keep it simple because it really follows TA patterns very well, because it's mainly psychology and not too much like fundamentals. But yeah, people want a lot of like pattern, the more monitors you have, guys, the more successful you'll be as a trader. So you gotta have 6 monitors, many colors everywhere. That's the only way. That's how many people think.
exactly. Let's move on. Passive income. We touched upon it before. A lot of the companies that were providing passive income as a business model, they all went bankrupt 2022. And a lot of people are asking that now, and I'm also not sure of the answer. Is there any way to get passive income in crypto, or is it all lousy risk reward? Let's take it quickly. Do you have any opinion on this? I'm not sure myself.
Yeah, I mean, if it's staking, it's if you're gonna hold a coin, you can also stake it if it is if it is for example in Solana and in ADA, you can just take it right in the protocol. On ETH, it's a bit of a smart contract risk because normally you stake via like Lido or Rocket Pool, so there you have an extra layer of risk. But if it is like in ADA or Solana, I don't think there's smart contract risk there. So then the risk is the same. That, like, you hold the coin, what can happen? Solana maybe is hacked and it goes to zero. That's the risk. So you can stake it, and what happens if something happens to staking? Let's say staking contract or like staking feature is buggy. Well, Solana will likely go to zero then anyway, because so many people have so many billions staked there. So like, what is the difference between? It's like holding the dollar or buying the treasury with it. The risk between holding the dollar, okay, the risk is that US goes to zero. Well, holding the treasury is the same. If US defaults on the treasury, is going to go to zero anyway. So if it is like that, then it makes sense. But everything else, like third-party app, I think we'll learn that it is picking up pennies in front of the freight train, and it's just a few percent, so it's not worth it. Better to go and buy some meme coin, like GeoBot and all of that stuff. Likely you're gonna be better off than doing that.
What's your take, James? Better
I
to
think
trade and hold, or is there any like passive income yield opportunities?
Yeah, like one of the things I do is I keep what I call my money market in a thing called JLP, which is a dupe perpetual liquidity type fund, and you get like 100% a year on it, because people use your capital to trade long, trade short, trade 100x, whatever, and it's a very good place to park money if there's room. Sometimes it sells out pretty quick. So I can't remember how many million are in there right now, but that's one of the things that I do for yield as well as stake. I stake Sol heavily. That's been pretty incredible. You buy a ton of Sol at $8 and you're getting 7% APY. It's when you actually do the calculations, the ROI is insane. So it's always risky, of course, to stake and to commit your capital to liquidity pools, but I think at this stage in the market, it's safe. When we get hotter, then it's time to pull back and move to safer assets.
But you gotta understand where the yield is coming from. That's the most important thing,
Yeah,
because
exactly.
I remember interviewing Mashinsky. I asked him, where does the yield come from? Like, I never really got. He said, yeah, like hedge fund. Blah. I mean, I never really got it, and that kind of what saved me. But I also thought, but it's like Mashinsky. Everyone loves him, so maybe I just don't get it. But that actually kept me away from touching it. And with like ETH or Solana, like, it's from inflation. Like with ETH, it's inflation, and actually ETH is also deflationary because the burn is more than the inflation. In Solana, likely also inflation, and the same. Like, as long as you understand where it comes from, why not? But as soon as you don't really get it, and you feel too dumb to get it, don't touch it, because who the hell knows? If you get it, fantastic. And if it makes sense for you, because in most cases, it's not complex. Like, it should not be complex where the yield comes from. If it's too complex, something is fishy. It needs to be simple. that even a 10-year-old understands where the hell the yield comes from.
Yeah. And by the way, for the JLP stuff, the people that borrow to do leverage trading, they pay 0.01% per hour. The interest rate is not per year, it's per hour. And that's where you make your yield. So never hold these perps long term as well.
Let's move on. More banks are entering the party. BlackRock adds 5 new AP, and AP stands for authorized participant. And we're talking Goldman Sachs, Citadel, Citigroups. This is what we talked about, guys. Remember last year, we said it here. All the banks who have been against Bitcoin, now they have a part of the price action. They have a part to play between the customer and the business, and here they come. I think this is fantastic. I think we will get all the big banks marketing Bitcoin in the end. What do you think, guys?
Yeah, we spoke about this at the beginning. They wait 90 days. They make sure this thing doesn't go to zero. They make sure it's not too volatile. They make sure the alpha is there. They make sure it's being adopted. I mean, all their boxes were checked. And then they go, okay, guys, let's go. And you think the BlackRock buying was big? I calculated that just these 5 firms alone could drive the price. Just alone, these players, easy drive to price to $150,000 Bitcoin if they allocate just 1% of their assets under management. These are big, big players, heavy hitters. 6.3 trillion under management across the 5 from my calculations. And again, game changing. It's too scarce. And people don't understand the scarcity. Ivan does. You do, but most don't. They think, oh, it's just buy, sell. It's going to go up here and then it's going to retrace 80%. And that's what's going to happen. So no, this time is so different in every perspective.
Then let's move on. Gold, like the old gold, the one that we used before we had digital gold, that broke out after trying for so many years. This is 2020, and it almost came there at the end of the previous parabola in 2011. And now it broke out. My take is that there's more and more big players who start feeling the same as we have talked about here many channels, that wait a minute now, this debt spiraling out of control. What's happening here? Maybe we should, buy some gold for our country deposits and not only have fiat US dollar. But I don't know. Here it is. It is a generational breakout of gold. Do you think it's good, or is that bad for Bitcoin? James, do you want to start?
Yep. Actually, I prepared a little slide on this one that you can pull up there. First of all, when gold rallies like this, it actually can be very concerning, but don't worry, it's not too concerning. I'll explain why in a second. But typically it means a lot of economic uncertainty. People are going flight to safety. Also, it means high inflation is coming. We know that from the printing by the governments, even though it's stealth printing, it's not going into people's wallets, it's going into the banks. Then you have geopolitical tensions and war. Typically, gold spikes when this happens. And also, we do have multiple wars going on, and there's lots of geopolitical tensions, and there's lots of wannabe dictators trying to get in place around the world. So that's driving a lot of the gold and financial market volatility. When markets don't feel safe, people go to gold. But the truth is, it's all China buying. That's what's driving this price up. And no matter what time frame you take, you go back 50 years, you go back 40 years, 30 years, 20 years, 10 years, 5 years, you divide the price of gold by the M2 money supply growth in the US, you are losing money. So people think it's a great investment. It is the worst thing to preserve value. And I've proven that time and time. I troll Peter Schiff all the time on his Twitter, and he gets excited. He gets really excited when gold makes a new all-time high, but he's just a shell of gold, and gold is not a good asset. So the bad news is typically when gold rallies, it means something really bad is coming, like World War III. But now we can all be explained by China buying. So that's my take.
No World War III then.
Well, that's always possible. It's been possible since what, 1970, 1960?
But you don't think it has to do with more concerns of fiat stability and things like that? I mean, the central bank of some country, they're not going to go and buy Bitcoin today.
That's the inflation piece there. You
Yeah.
know, fiat's going down. You need your fiat hedge. That's why gold is pumping like crazy. You know, and again, you pull up gold price divided by M2 any time frame, you will lose. Because the U.S. government printed $1.6 trillion in 2 weeks. And those people that understand gold, they also understand money printing and debasement. That's what they do get. And when they see that type of money printing, they buy gold. And China has its own issues. They need something solid. They don't quite trust Bitcoin, but I have a theory that China is mining a ton of Bitcoin and they're not selling it. So they're also building their Bitcoin bags, but you will not hear about that.
I'm happy for Peter Schiff. He has been waiting for 15 years. So he has been consistent. And we have to admire his consistency. I'm not sure how many people would, stick around hoping for their favorite meme coin for the next 15 years if it's not moving. Yeah, Ivan, do you have any thoughts on this, or should we move on?
Let's move on.
So, Tesla stock. If you haven't watched it, guys,
Ivan's gold bags are full. He doesn't.
No, we can move on.
Actually, James, you had such an interesting video. Was it on Saturday or something like that about the fleet, like the autonomous fleet of Tesla car business case? How much could that be worth? Because if anyone has missed it, the full self-drive is getting more rolled out, and then the obvious conclusion is that perhaps you don't need to drive your car. Maybe you can, have a fleet of cars and you just jump in and drive to where you want to go. And James made a fantastic calculation of how could that be reflected in the share price. James, do you want to try to make a few minute summary of your 1 hour detailed video?
Yeah. Well, the first slide here is so people can understand what's coming. What's interesting about the revolution, and this is what we've been warning about, the era digitalis, FSD. This is what Elon Musk calls baby AGI, basically a robot on wheels able to drive itself. But when you break out the calculations, the numbers get really crazy really fast. So the 6 million Teslas, they're all kind of enabled to become robotaxis through an over-the-air software update like that. And that was going to be the biggest value creation ever that hits the planet. And nobody understands it because everybody hates Elon Musk and Tesla and freedom of speech and all that good stuff. But here are some simple calculations as to what it could impact. If you have just 1 million, 1/6 of the cars become robo-taxis, they can easily make $300 a day. And if Tesla only gets 15%, not 50%, they should easily be able to get 50%. But even if they only take 15% at a PE of 60, because of the growth rate of this business and the high margin of this business, they could easily become an extremely valuable company with a very high stock price. So, and the second slide is more of a detailed analysis as to where the stock price could go. And these numbers get really crazy, but the robo-taxi, people like Kathy Wood at ARC has been talking about it for a long time. I worked with Sharon Basher one-on-one on this actual appraisal. He approved all the numbers. He's probably the best at robotics and valuations out there in the marketplace. And, it gets crazy, but 2032, it's not unthinkable that the Tesla share price could go absolutely bonkers. We're talking $8,000 plus based on this pure margin business. And people don't understand what it means to disrupt transportation. Think of all the time people get back, or they can work in their car and they don't have to worry about a car. They don't have to buy a car. They can just order one on their phone and it'll bring them straight to wherever they want to go, and they can be much more productive. In fact, ARK Invest estimate that robotaxis alone could add 8% to global GDP, which again is mind-boggling to think of. But
yeah, I just enter one thing here, because this is so profound, and I think that most people listening, they don't understand what we're talking about here. Why is this relevant? But I can say from personal experience, because I lived in a lot of countries which are not, say, Sweden or US. In these kind of countries, we tend to drive our car ourselves, like go going to work. When I worked at Ericsson, I drive my car myself. I'm guessing, James, you probably drive your car yourself, right? Where you go somewhere. But in many other countries,
the car drives
it's not like that. Say again?
I have FSD in my car.
Exactly. Now you do, but I mean over the past 20 years or so.
Yep.
While when I worked in other countries, I had a driver. So, I don't drive the car. It's like a physical driver. We're not talking FSD here or robot. It's like a person who comes with a car to my house. I go out with my laptop. I sit in the back seat and get in the car. And then when I sit down in the car, I open my laptop. And while we're driving to office, I'm checking the email. I'm checking what's happening. And when I arrive in office, I'm already up to date on what's going on. While in the Western world, we haven't figured this out. So we kind of drive our car ourselves, which is honestly a pretty low value work for an executive. And then you arrive to office and you start working. And you lose a lot of time. And I have experienced it. It's a career changing difference that you don't drive your car. You have someone else driving your car. So you can focus on probably a higher value activity, whatever work you have or whatever you're interested in, studying or reading or something. And then some people will say, no, but I can't do that. I get motion sick. So this won't work for me. But that is wrong. So that can also clarify, because fishermen, they're not seasick on their own boat, because the brain adapts to the motions that you're used to. And after a while, you don't get seasick anymore. While that fisherman going on another boat might still get seasick, but the brain can adapt to these kind of motions. So it's the same. You go into space station, you probably get seasick in the beginning, but after a while you don't. So everyone can learn actually to use that time in a different way. So I just I thought of that, James, when you said your video, because this isn't about saving some money on the driving the car or something like that. It's like you get back maybe up to 10% of your time.
Yes.
And that is enormous. Okay, sorry for the intermission, but I just thought it was important.
And also you can buy, this is the other thing that people have to wrap their heads around. You could buy a car for $35,000 now that can drive itself, and it can make you $500,000. This type of economics has never happened in the history of the world. So think about that. Who here in the chat would buy a car for 35 grand and then you make $500,000 in 5 years with no cost of ownership, pretty much, except for you charge it home on a pad and your car will park itself. That's what's coming. And what people need to understand is it's not coming in 10 years. It's coming real soon, either this year or next year, but it's definitely coming.
But the objection, and if I have to bring some counterpoint, won't there be competition? Won't the opportunity is definitely there, but won't there be 10 companies pressing down the price until there's low margin?
No, because first of all, there will be the safety aspect. Nobody has the type of data. So Tesla have 1 billion miles of FSD of data that they can look at. No other firm, the next biggest firm, has about 10 million miles, I think. So nobody has the data advantage that they have. Nobody has the compute advantage. Nobody has the manufacturing advantage that they have. Maybe BOID do, but they don't have FSD. And the final point, when it comes to coverage, it'll become a race of the nines. And the first function of Tesla is to avoid accidents at all costs. And there's tons of videos you can watch online as to how cars move. They anticipate things. They'll see a little ball running across the road and the car will stop, and then the child will be right behind the ball. Or a ladder will fly off the back of a pickup truck and get in front of a car. This thing will accelerate to get out of troubles. Kind of, it's people don't understand how remarkable it is. So when it comes to life and death, if you have a teenager, I think you have teenage kids, you wouldn't want them in any other vehicle, because teenagers do make mistakes. They get distracted by Instagram or whatever else on their phone, TikTok, and the odds of them crashing is quite high. So this again, it's going to change the game for everything. Just mark my words. I've never been more confident about anything.
Yeah, it is so interesting. It is so interesting. Go watch the video from James. I think it's really insightful, and it will definitely be interesting. We also have let's take questions instead. We skip the last point and we move on to questions, because we have so much to talk about. take a few comments here. It's too early to write off ETH. Okay, let's take the counterpoint of this as well. Let's move to ETH. I mean, it could be. It could be that this is a bear trap. You know, that price breaks just below support and reverses, and then next week we get positive ETF rumors and the ETF skyrockets. It is absolutely possible. I'm not saying that this would be a typical bear trap that's happening. Maybe I can take one more. Comments on the yields. So that is, if we should look for something that is actually could be a concern, and not only the moon phases or the moon eclipse or something like that, I'd say it would be this one. The yield here is kind of breaking out. This is a 2-year yield. And often when yields go up, speculative assets go down short term. That has been a pattern for a long time. But yeah, so that would be, if we have any bears here that's looking for hopium, it would be this chart. That's the only thing we can find, together with that, you know, if this one reverses, if it doesn't break out and close today. But that would be my take. Do you want to comment anything on the yields?
8 weeks, the Fed will cut. That's in June. Okay. All this other stuff is noise. If they don't, the US government will be spending $2 trillion a year in interest, which is 3 times the defense budget, which, with the political uncertainty around the planet, they need to increase the defense budget and not spend it on their own interest. It's just absolutely ridiculous what's going on. But anyway, that's just the math.
Yeah.
2 months. And then, by the way, when the rates start getting cut, that'll accelerate. There'll be 3 to 4 rate cuts this year. It'll happen fast and furious, and there will be a banking crisis because of commercial real estate, and other things like that are going to happen. And then you'll see risk assets go to the moon. That's the other interesting angle, including Bitcoin.
It's a funny ground. Presidential selection. I don't know if it's a typo or a joke, but it does feel like that sometimes in the US rather than election. But for sure, I mean, we haven't touched upon today, but we talked about it a lot. Election seasons are coming up. Usually that means money flying into the markets and pumping up. Can I buy a bot that looks like James from Susie? I don't know, James. You have to call Elon and ask if there's customization possible.
What do you want to do with that bot? The tech is not good enough for many use cases.
Yeah, it will be a 2.0 coming up. Sorry, I clicked the wrong one. Are you guys interested in Coinbase, the stock, at all?
Yeah, I mean, that one is quite interesting because it is the first stock that is really capturing DeFi. I mean, they are having own chain, maybe even own coin soon, and it's publicly listed. But from a value capture perspective, I think you, James, have thought about it a lot. And you don't really like Coinbase, right? From what I heard, as a stock, from what I heard you analyze.
I think there are better stocks. What I don't like about Coinbase is how much they pay themselves in stock-based compensation. You know, they'll lose maybe $1 billion and then they'll pay themselves $1 billion in stock. So that has like a dilution effect. I don't like assets that dilute, like cryptos. I don't like cryptos that dilute. And the other thing is as well, Coinbase made a lot of money for a long time from being a kind of dominant player like Binance. But now with the ETFs, that's going to cannibalize much of the Bitcoin commissions that they used to get in the past. And I also believe DEXs are going to become much more widely adopted, and there will be that flippening of SEXs versus DEXs that's coming too. So all these little macro things keep me away. Now, I would be a buyer of Coinbase at 60 or 80 bucks, but not at this level.
Yeah, it has gone up a lot. I mean, if anyone bought the bottom, I don't have any Coinbase, so I don't know. It pumped like 10x almost. Let's see. Let's take some more comments. Ask comments, guys. And actually, this I'm sure it's like a joke, and there isn't such a coin, so don't go and buy it. Now someone will create it probably, but don't go and buy it. We don't have any coins as far as I know. But What do you think about the acceleration of coin creation? Ivan, you talked about that this morning, I think. Do you think that there will be like an avalanche? Will everyone start creating like 100 coins every day?
There is a video from Andreas Antonopoulos that everyone has to watch. Crypto Banter posted it like a week ago or so. But he basically spoke about the fact that even kids in the, when playing around in kindergarten, likely to create their own coins. Why play with Pokemon when you can create your own Pokemon? We're seeing it already with Roblox. Instead of playing a game, kids are creating their own games. The Minecraft, the same thing, is user-generated, like kid-generated entertainment. Why play with Pokemon card? You can create your own Pokemon card, your own tradable thing. And if it's just a few button clicks, why not? It's going to be so simple. And likely we will see this explosion of coins because they're cultures, they're brands, they are communities. And we are seeing the early steps of that in crypto. I know it sounds insane. Like most people just will think it sounds insane. Like, what do you mean? You're going to create a coin and you're going to trade it and have a brand around what they're speaking. But it is like that. And if you are part of memes, you know what it is. I mean, we look at Dogecoin. It's been around for so long. Why? Is it because of tech? No, because it's a dog. People like dog. It's nice. It's a community. So yeah, I think we're gonna see an acceleration of that. I will try to find that Andreas Antonopoulos video and post it on my Twitter also, but he put it in a very nice way, basically what I just said, but he made it even better. Like it was very, very, it hit the, like he always does in his speeches. So yeah, absolutely.
And anybody can spin up a meme coin in an instant. People do that. Influencers are doing that right now. It takes 5 minutes to do. It's kind of like what happened back with Binance back in the last cycle. Now it's all happening on Solana, and now other chains like Avalanche are trying to get in on it. I think it's kind of bad because there's so many of them. They can't capture all the value. Like anything else, a couple will win and capture all the market cap. The rest will just be money grabs for the people that list them. And I would never run money or list a token, just for the record, ever. Never will, never have. And I
think a lot of people say that it's safe because it's meme coin. I don't think it's safe. If I would go right now and create a CTO token and then I spend the next 2 weeks pumping it and then I'm selling it at the same time as it's pumping it, that can't be good. That just can't be good.
And they make millions and they're all doing it now. Don't be fooled, everybody. There's a reason for it. And you are not going to be the one making the money. You're going to be called what's called a bag holder. Do not be anybody's bag holder, ladies and gentlemen.
I think, in the word of warning, and I see one trend that really accelerated last week is that there's so many accounts popping up saying that this guy he put in 5 bananas and he made $100 million, and here is the proof in the wallet, and then it's a screenshot of a Delta wallet application or something like that. But guys, you can go into the application and put in the coins. Doesn't mean that you have that person actually owns them or something like that. It's just doing a before after picture. The actual money is made by monetizing that engagement because it gets like 100,000 people liking it and they're feeling, oh, this guy really knows what he's doing, so I better go in there and buy whatever it is he's selling.
But meme coins, they are a reaction against all of these projects with private sales and VCs, because with a meme coin you can see how much of liquidity is burned. You can see how the coins are distributed. Obviously you never know if they're gonna sell, but there is a sustainable way to do a coin also, because if you do a coin you can do a liquidity pool where you are like the main liquidity pool because you control most of the coins to begin with, so you can monetize through that. That's how many this honest coins monetize. They never sell, they just get a fee from the liquidity pool. And I mean, there are ways to do it honestly, but obviously when there is a frenzy, when there is a FOMO cycle, we will see all kinds of scams, rug pulls, and so on and so forth.
Yeah, but there's no doubt that meme coins have done very well. They have been the winners of the past 3 months or something like that. And there's no doubt that there's been a lot of money making opportunities here. I'm not saying it's I'm not saying that's not a possibility. So definitely not. I'm just saying that some of the social media shilling isn't real. So, you know, keep your brain switched on and don't get dragged into some FOMO thing and start losing all the money. Because sadly, the reason I brought it up is that, guys, we're in the biggest bull market in so many years, and maybe there will be many years until we see a bull market like this. So don't be in the middle of that and lose all your money on one stupid thing because you FOMO. So it seems like some guy on Twitter making millions and you only made 100K and you feel very bad. So then you lose all your money. You lose all your 100K and then you don't have anything.
And that's so true. In the bull market, you think people would be happy. You're making money, everything going up. But actually, some people are even more miserable in a bull market because you feel that you're missing out on something every day.
Oh, yeah.
By the way, sadly, I have another meeting in 2 minutes. So
guys,
I have to
it's been fantastic.
it
We're over the time as usual. Which channel are we on next?
James.
Yes.
On Monday, we will be back. Let's see what's happening with Bitcoin, altcoins, everything else. We will. Thank you, everyone.
Thank you
Remember
both. Thank you,
subscribe
audience.
and like. Smash the likes. We had all-time high in viewers, live viewers on this channel for DCA. Thank you, everyone, for listening. Thanks for commenting.
Awesome.
Thank you,
Thank you,
guys.
Bye-bye.
Bye-bye.
Peace.
Bye.